Hey guys, good afternoon. Good afternoon. Thank you guys for joining us today. I hope you guys excited about today's topic about intro to home ownership. We have the pleasure of having Miss Melissa with Bank of America going to be presenting today and hoping to teach you guys a few things that you guys might have already not be aware of or are going to be aware of. We just kind of want to get more information into it. So further ado, I'm going to let Miss Melissa introduce herself.
Hi, everybody. My name is Melissa Lopez with Bank of America. My NMLS number is 618962. It's definitely important for you to know that, so you know that I'm licensed to originate mortgages. I actually sit at the Oak Cliff Financial Center at the Oak Cliff Tower off of Zang Boulevard. So definitely after we have this session together, if you'd like to schedule an in-person appointment or an appointment over the phone, know that I am local and accessible to help you reach your goal of home ownership. So we'll go ahead and get started.
Thank you, Melissa. And I did forget to mention, my name is Christian Marquez. I'm part of the homeowner service team with Dallas Area Habitat. I'm one of 3 of the counselors here with Dallas Area Habitat. So we're excited to have Melissa, and let's get started today. So further ado, there we go. Now, Melissa, we talked about this, the Great Homeownership Workshop. So let's get going, okay?
Yeah, absolutely. So the most important question that anybody needs to ask themselves is it the right time for you to buy a home? There's a lot of different steps that go into home ownership. We're going to go through this slide. We're not going to go through all 32 pages because some of them don't fully apply to the beginning stages of where you are right now. There's a lot of things that definitely need to be considered that we're going to touch on. So we'll go to the next slide. So there's huge advantages of home ownership versus renting, right? What I always tell my clients who come and speak to me, that the most important thing is equity. Whenever you buy a property, you're going to have equity benefits. You're going to have property taxes, tax benefits. You're going to have the pride of home ownership and stability versus the disadvantages. When somebody rents, you earn 0 equity and your interest rate is 100% because you are only paying the other person to benefit from your monthly payment. So it's always something to consider, rent versus buy, and the advantages and disadvantages of both. So go to the next slide. So preparing for home ownership, you have to understand one, of course, credit is a huge compensating factor. Also, a big part of it is going to be your monthly budget. In anything, you do need to prepare for a down payment and closing cost. A lot of people tend to use their tax refund. They'll take a loan out of their 401k, or they just save aggressively for those amounts. The bottom section of the slide kind of gives you a breakdown of where your down payments could be, anywhere from 3% to 20%. And then your closing cost fees are going to be anywhere from 2% to 5%. And that is going to be calculated based off of your purchase price.
And so, Melissa, what would you say to someone that wants to know, hey, how am I ready? How can I become a homeowner, right? Like, is there certain things when it comes to like having the, 3.5% down, or, like right now we're looking at preparing for home ownership. Is there a specific like requirement they want to know before they get started and go speak to you, or what would you recommend them do?
So the most important thing, we'll start with the first bullet point of credit history. Not only do you need to have a minimum credit score with Bank of America of 600 or above, but you have to have a minimum of 3 trade lines. And what trade lines are 3 lines of credit that report to the credit bureaus. So Equifax, TransUnion, Experian. They have to report to all 3. Now, you can have rental history report to the credit bureau if your landlord or leasing office allows. So that way you don't have to essentially open lines of credit. You can utilize what you pay currently monthly and have that to report as your credit history. Also, you're going to need to know what your monthly expenses are. So in anything with a mortgage, it's principal, interest, taxes, and insurance. And in some cases, private mortgage insurance will be attached to your loan as well. So it's important to know how much you can actually afford. Most people utilize their current rent payment as a starting point, and then will kind of give themselves a little bit of a cushion monthly to include what property taxes and homeowners insurance would be. So essentially, you're going to want to get your 3 trade lines on your credit bureau and then start to really hone in on that monthly budget of where you are comfortable paying for a house. And as far as the savings are concerned, honestly, in the type of lending environment that we're in, there are so many grant programs and other down payment assistance that are available to you. So just save as aggressively as you can based on your current monthly needs. We can go to the next slide. So here's a little bit more about credit. So as I mentioned, Bank of America does start lending at a 600 credit score. There are so many different buckets when it comes to how your credit score is calculated. I'm not a credit expert. I've done this for 13 years, so I have learned a couple things along the way. But there is a difference in good credit versus bad credit and how it affects you negatively. Bank of America does not look at medical bills. A lot of people, we know things happen, so it can affect your score, but it's not a part of the history that we actually look at. So as far as credit, you're going to want to look at your ability to pay your obligations on time. That's a huge compensating factor to your score. Also, credit length, how long your trade lines have been open. And then also your utilization. When preparing your credit to buy a house, you do not want to have your credit lines maxed. It actually hurts you more than it helps you. Bank of America at the very bottom of the slide, you can see non-traditional credit. What that means is we take what you currently pay monthly and convert that to a credit report. So rent, water, utility, cell phone, we can actually create a credit profile for you as long as you've paid these outside obligations for a minimum of 12 months. So that's a huge thing. And if anyone has questions, we can touch on that a little bit later. We can go to the next slide. So here are those buckets that I mentioned on how credit is broken down. Credit scores range from 300 to 850. Your payment history is 35% of your score. So anytime you have a late payment, just so you know, the bureaus are always quick to report that. When you pay on time, they are a little lax in reporting that information. So always make sure that when you do pay, you either pay on or before the bill is due. Your total debt, which is going to be your utilization, is 30% of your score. The history of how long those accounts have been open is for 15. New lines of credit only count for 10. And then types of credit used. So is it an installment loan? Is it a revolving credit card? That counts for 10% as well. You can go to the next slide. So setting up your budget for home ownership. What I tell people when they come and have a conversation with me is you can't just look at what you're paying monthly. And we can't just assume that your only debts are what's reported on your credit report. It's very important that you take the time to put pen to paper and write down your outside expenses before you commit to buying a home. We never want you to go into a situation where you are house poor. So you need to look at what you pay monthly in your credit, as well as your cell phone, your gym membership, your contributions to your church if you make those monthly. Those are all outside things that do affect your monthly income to make, to put you in a situation to where you either can or cannot afford your monthly mortgage payment. Next slide. Your payment monthly is going to be inclusive of principal, interest, taxes, and insurance. What your lender sets for you is your principal and interest. Your principal and interest payment is going to be based on how much you borrow. Where the bank does not have control is going to be your property taxes and your homeowner's insurance. Your homeowner's insurance, you do have control of. You can get a policy that meets state minimum coverage, or you can get a policy with all the bells and whistles. You have control of that. And the property taxes are actually controlled by the county in which you live. So right now, with a bunch of properties increasing, property taxes are increasing as well. So always be cognizant of those two additional compensating factors that do affect your payment that are outside your lender's control. Next slide. So quick math, just to help you kind of determine where you would be comfortably monthly, is to take your gross monthly income. And by gross, that means what your employer pays you before your taxes and insurance and any other contributions you have are deducted. You're going to multiply that by 28%. And whatever that dollar amount is kind of where you're going to want to be monthly. Next slide. So saving for your new home. Bank of America, if you were to come into one of our financial centers, do have bankers and relationship partners that you can sit with to kind of set your life plan on when is the best time for you to actually apply for the loan and start kind of making those steps forward to get yourself into a mortgage. Bank of America has a lot of resources. The website is actually on the bottom of this slide, bankofamerica.com/lifeplan, to kind of help you go through and utilize those tools on your own if you don't have the ability to come in and actually have a conversation with us. Next slide. So getting pre-qualified. There is right now 2 ways to get pre-qualified. And also there's another term called pre-approved. To get pre-qualified, you would actually come into one of the Bank of Americas, or you could do it via a lender's website, preferably mine, and do your online application. From there, we do look at credit, we look at income, we look at assets, and we see how much house we can get you pre-qualified for. Now, Bank of America has gone another step to say, if you are confident or comfortable with the loan terms that we've presented you, we can actually send the loan to an underwriter to have you be pre-approved. Now, when making an offer, pre-qualifications and pre-approvals generally have the same weight. Again, we are in a very weird lending environment right now. So pre-approvals tend to be more of the route sellers will accept. There are no costs to you for us to get you pre-approved, but it does give you that security to know that when you're making an offer on the loan, Bank of America has already approved you for that amount when you're making that offer. Next slide. So common documents that are needed in any situation when you submit an application, the lender is going to want to confirm what you've said on the application is true. So most common things that you're going to need are your most recent pay stubs covering a 30-day pay period, your W-2s for the most recent 2 years, and any personal business or any personal banking accounts as far as checking, savings, 401ks, any investments, anything that you think would possibly be used to purchase the home is what you're going to want to provide the lender. I go an extra step and I do ask for year-end pay stubs for the 2 years prior. If your income does include any overtime, any commissions, or any bonuses, always know that those can be averaged and included in your income, which could help increase your purchase price. Now, if you're self-employed, please, 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 please know that we can only use the income that you tell the IRS that you make. Again, we can only use the income that you tell the IRS that you make. We understand when you are self-employed, there are expenses that you have to maintain your day-to-day, but understand that we can only use the income that you tell the IRS that you've made for that year. So in a nutshell, if you're planning to buy a house, please let your accountant know so they can make the needed adjustments when giving you your deductions for the year. Next slide. So Bank of America, again, has multiple resources. The next slides I'm not going to spend a lot of time on. It does just give you links to our down payment centers. It gives you links to our sales centers. Bank of America actually has different homeownership community websites that you can go to and sign up for classes. We have websites that go over our grant program. This one is just understanding down payments and savings programs. So just a lot of resources that we have, whether you go directly to my site or you just look at bankofamerica.com, it's going to have those additional links. The next slide actually goes into a little bit more detail about what our down payment grant program is. So right now, Bank of America is offering up to $10,000. So that's either going to be 3% of your purchase price or a max of 10,000, whichever is less, to help you purchase your primary residence. There is no repayment required for your down payment. There is also no restriction on how many years you spend in your home. So in any situation, when you apply for the loan, please know that our system through the automated application will not attach the grants. So you do then need to be connected with the loan officer to have a more in-depth conversation so we can get those grants attached to you. It's important to know that there are income requirements when it comes to utilizing Bank of America's grant. So it's important, again, to speak to a loan officer to determine the county that you're going to be in, so we can then give you the income limit for that county. Or if you're choosing to buy in a low or moderate income area, that also has a different income cap. As of right now, the income cap is $71,200. If you buy in a middle to upper census tract, and when you buy to a low to moderate census tract, the income is $133,500. Most people say those should be switched. I'm not saying I agree or disagree, but usually when you buy in a low to moderate area, you do tend to have multiple borrowers to qualify for the home. So the income cap is just a little bit higher on that one. But I can give you a couple more resources at the end of this if you would like, so that way you can kind of determine where the area you're looking at falls, if it's low to moderate or if it's middle to upper. There is a home buyer education course that's required with using our grant. It's kind of like the course that you're taking. So I do encourage everybody to take it because education is power. And when you're committing to buy a home, the more you know, the better off you'll be. Next slide. In conjunction with the down payment grant, Bank of America is also offering closing cost assistance. We call that our America's Home Grant. The closing cost assistance gives up to $7,500 towards your non-recurring cost. What I mean by non-recurring are costs that you do not have to pay year over year. So true closing cost of the loan, any lender fees, any title fees, third-party fees, the bank can utilize this money to pay for that. We can also use some of the money to buy down your interest rate, which is to get you in a better interest rate over the term of your loan at our dollar. There's still no repayment needed on this amount. It's truly going to be grant money that you can use to get you into a home. The same income caps are attached. The biggest difference is with both grants is if you're a conventional loan or a conventional borrower, which is a loan product that we offer, and you're eligible, you will receive both grants, down payment and closing cost assistance. If for some reason we are not able to take you as a conventional loan option, you do still have accessibility to our grant. If you are going to have an FHA loan, you are still eligible for up to $7,500. However, you would have to be vested your down payment. So just something to kind of know when thinking about Bank of America as an option to utilize our grant program. Next slide. So layering, as I mentioned, you can put both grants together, which would give you up to $17,500. Again, it's going to be dependent on the loan program that we take you, whether conventional or FHA. And our loan options do start with as low as 3% down. So essentially, your down payment would be paid in full by us. Next slide. So our 3% down payment mortgage is called our affordable loan solution. It is a fixed rate product. So your interest rate from your first payment to your last payment is not going to change. The middle part of this slide just kind of goes over the loan product's capability and what we offer. So of course we can attach the grant to it. You can accept gift funds. It does allow for a little bit of a higher ratio when it comes to debt to income. You are also allowed to have a non-occupying co-borrower. So if for some reason you're not able to obtain the purchase price that you want by yourself, that doesn't mean you can't have somebody help you with the loan, and they don't have to live in your home. So a lot of different facets to this loan that actually help you get approved for the mortgage. Next slide. So these are just loan product types. I'm not going to spend too much time on this because there are a lot of loan options and I don't want to confuse everybody. But Bank of America does offer a different range of products. So it is important to get with somebody to sit down just to confirm what your individual needs are and the best loan product for you. Next slide.
Sorry, before we go forward, we did have a question where someone said, what is the difference between the ARMS, adjusted rate mortgage, and then a VA compared to conventional and FHA, which most people know about?
So an adjustable rate mortgage is exactly that. Your interest rate at a certain point in your loan will adjust. We have the ability to keep your interest rate fixed for either 5 years, 7 years, or 10. 1 second, I lost you. Okay, there you are. So if we do that, then what that means is on that 6th year, on that 8th year, or on that 11th year, your interest rate will then be whatever current market rates are. So it's not going to be the interest rate that you locked at when you first started. It could be whatever it is now. So let's say somebody got into this loan a couple years ago and they're now getting out of that fixed rate option. Obviously their interest rate would be a lot higher, right? It's going to increase dramatically, but it could also go the other way. So it's just a risk. So if you like to gamble and you like to play the market, definitely get into an adjustable rate mortgage because you never know what you're going to get, right? These loans are usually really good options for people also who travel a lot for work. So if you know you're only going to be in one area for a very short amount of time, then definitely ask for your options as far as an adjustable rate is concerned. VA is for our veterans only. That is something that they have earned for their time of service. They are actually given a certificate of eligibility, either at the time they exit the military or while they're still active duty. And that is a loan program that we offer them at 100% financing. That's considered also, that's a government loan, just like your FHA. Your FHA is your Federal Housing Administration loan. And it also has fixed options. It has low down payments. It has really good interest rates, but it also has upfront and monthly mortgage insurance, where your conventional product is actually only going to have monthly mortgage insurance. And once you retain 20% of equity, that mortgage insurance then drops off. Did I touch on all of them?
Yeah, no, Melissa, yeah, we had, because they had
Okay.
questions about both. So Tommy had the
Yeah.
question about the VA loans, and that's when you get the 0% down, but they forget to mention, or they don't get educated on the part that, hey, you still have to pay closing costs or other fees that you have to, to get into the home.
Yeah, so VA, in some instances, depending on what the actual eligibility is, because not everyone's eligible for the same loan amount, right? It's based off a rank. So depending on what the rank is, you may have some flexibility in the loan to actually roll in the closing costs. So if you are VA eligible, again, have that conversation with the loan officer. Let them know up front that you are VA eligible, because in the long run, 100% financing for a home, again, you've earned it. You've served your country. So take advantage of it if it's an option.
Thank you. Thank you.
Of course. So the home loan process. Lots of people like to run out and look at houses, right? Because you get alerts and this and that. There are steps before you should go and do that. Getting pre-qualified is one of them. Submitting your application. With the application, there are always going to be other things we need. So even in hearing that, I'm sure there's like are you serious? But yeah, so even when you apply up front and we collect your documents, I trust me on this. There is something that you are going to give us that we're going to have more questions about. So it could be something in your pay stub that you have a 401k loan, or we see that child support payment coming out. We want to know how long you're committed to making that. So just be very open and upfront with your loan officer And also be patient because we're on the same team. We are trying to get you into that home and get you approved. So just know there will always be something else that we ask for after application. Then once you get your final loan approval, that means we have gone through any and everything we possibly need. You're under contract, the home is appraised, everything is done, and then you get to closing. Most people just want to hurry up and get to closing, but we'll get there. Just be patient with us and, know that we are helping and working with you to make sure you're happy at the end of it. Next slide. So this is just going to go through details. Again, this is more just of informational website. If you want to, you can go to my website. You can go to Google Melissa Lopez at bankofamerica.com, click on my website. All of these functional tools are on the side margin, just like quick touch tabs. You can go in there, you can do a mortgage calculator. You can look at current interest rates. You can read over products. We can go to the next slide. So, okay, so it'll even also have educational classes on what to expect. So this information slide is actual on my website as well. It's going to let you know what to expect after closing. Obviously, you sign your documents, you get a copy of your homeowner's insurance and your inspection, you get your cashier's checks, all that fun stuff. You can go to the next slide. And you can go to the next slide. So how can I help? So obviously everybody's situation is different. Everybody has had someone at some point told them about their experience in buying a home, or somebody has told them about what documents that they needed or what, anything and everything. I've heard crazy stories from people when they've come to my office to talk to me about what they've been told, how this works. No loan is ever the same. So how I can help is being available to you to answer those questions and give you how your situation is going to work for us to get you into a home. So again, always be very open and honest, be willing to share your personal information and your situations so we know how to best help you, because that's what we're here for. Next slide. So keep learning. Next couple of slides are just going to be informational. Again, on our websites, we have so much content for you to be able to utilize at the touch of a button. We have a real estate center for you to do property searches. The real estate center actually even has this little red tag that lets you know if the property is grant eligible. And it'll also give you the income limit for the property based on its location. So we have over-resourced our websites to ensure that anything you could possibly need is there at the click of a button. Next slide. So finding home loan tools and more on my website, which is exactly what I've been talking about. Mortgage calculator, mortgage benefits, additional resources, home outlook newsletters. You can sign up for weekly newsletters from us if you want to regarding mortgage or how the housing market is or what rates are doing. So definitely utilize that tools and information if you're wanting it. I mean, if you don't want it, don't feel like you have to sign up. You can go to the next slide. Again, more resources. We're going to ensure you have all the knowledge needed for you to be ready to buy your home. You can go to the next one. This is all my contact information. As I mentioned, I am a community lending officer. My focus with the bank has recently changed. This was not my title when I first came on. I took a community lending role to do this, to focus on home ownership, to focus on kind of those outside of the box loans that do need a little bit more love, a little bit more attention to get there, right? I'm actually gotten pretty good at it. So I encourage you to reach out to me if you have questions. My email address is below my title, so melissa.lopez@bofa.com. You can go to my website to schedule an appointment. I am in my financial center. I even work on Saturdays. So there is not a time that you should not be able to connect with me. I've done this for 13 years. I have predominantly been in the Oak Cliff area and I'm from the Oak Cliff area. So I just have a love for it. Anything south of 30. And I've been a President's Club member with Bank of America. So if there's any questions that y'all have currently about what we've gone over, or just something you feel that the group could benefit from, definitely ask. I think, Christian, we have some time to do that, take some questions.
Yeah. So we actually have one that someone put in the chat. Like for lenders, do they require a minimum amount for insurance coverage for a home?
So state minimum coverage, right? So I'm not an insurance expert, but it is going to be dependent on the age of the home, the age of the roof, appliances, water heater, all that fun stuff. But as long as you meet state minimum coverage, we're okay with it. You can pick your own premium. I know some people will pick 3, 4, 5% deductible. So, you know, their monthly mortgage payment is only like $50. But just know when you do that, if something happens to the home, you have to pay 5% of whatever that is. So just, you know, again, that's where the budget comes into play. Be very aware of what you're comfortable spending monthly, and then we can help navigate how to make that work.
Okay, great question, Melissa. Great answer, Melissa. Thank you. And then we had someone say, with the housing market being the way it is, you know, is there anyone that has enough money to get a home, or what is your best advice for someone that's struggling in the open market right now?
Definitely, if you haven't been pre-qualified, do so. Like I said, that letter just it's weighted in gold, right? Because you have the bank's backing 100%. Also, work with an experienced agent. The problem with the real estate industry, this is of course my personal opinion, is when the market is hot, everybody wants to be a part of it. So unfortunately, you have a cousin, a friend of a friend, somebody at church, somebody who has no idea what they're doing, who wants you to let them sell you a house or help you buy a house. That's great. But in this type of environment, it's very important to go with the people who have been in this industry when it wasn't so hot and still made it through, because they know the information, they have those relationships with other agents that can probably help you get into a home that's not even on the market. So just be aware of who is helping you and ask them about their knowledge, ask them about their experience. Just like you'll shop a lender, shop an agent, because you need to have the right people helping you fight in this aggressive market.
Yeah, and I like how Melissa pointed out, here at Habitat, we do have a preferred lender, which Bank of America is, and also preferred realtors that we work with that are good representatives of what we appreciate for first-time home buyers, to educate our clients, right? And we always say at least reach out to 3. You know, it's like a relationship. You kind of have to date to see if they fit what you want, and do they communicate the way you want? Do they respond to you? You know, if it's not working out, you need to just cut it before it starts. And again, it is a hot market, so you want to have someone that's dependable and going to be there for you. We do have someone that asked about what type of loans are out there for people that are teachers or first responders.
So there is a loan option. It's actually not a loan. It's a assistance. There is a first responders. It's called Christian, help me with this. Is it Heroes?
The Heroes down payment.
It just completely left my mind right now.
Yeah.
Oh, I think it's called Homes for Heroes. I know Heroes is in the name. But it is a grant assistance that will actually help you with closing costs and down payment. Okay. So Bank of America does work with a lot of additional assistance programs, that being one of them. So if you want to reach out to me after, I can send you the links. The full name of it completely just left my head. But yes, teachers and first responders do have their own set of resources that's accessible to help you get a home.
All right. And can you explain the difference between like a pre-approval and a pre-qualification, just for some people that might not be aware of that?
Absolutely. So pre-qualification is going to be surface level. So we're going to do your application. We're going to pull your credit, and your loan officer is going to review your documents, right? Pay stubs, W-2s, most recent bank statements, and so forth. That's great. Hopefully you're working with somebody who really does their due diligence up front. Not everybody works the same way, but let's hope that they do, right? The difference in that is there could be something that they missed. Human is human, right? Human error happens all the time. They could have calculated your income incorrectly by $50, if not $100. That kills the deal. So the difference in the pre-qualification is at surface level to where the application's been done. One person has reviewed your documents with you and then provided you a letter based on what our system says you can buy. A pre-approval does an extra step. It goes to a licensed underwriter who is going to then re-review your information, double calculate your income, overcheck your assets, and confirm that what our system says is accurate. Because you got human error and you got system error. So it kind of gives you that third layer of reassurance that you are approved and the bank is going to back you for that purchase price.
Okay, awesome. No, thank you for clarifying that.
Yeah.
And someone posted a question about, do you guys specifically work with community grants or stuff like with the city of Dallas or Dallas County, for example, being here?
Yeah.
And what is the difference between a grant or, assistance like we talked about for your down payment or closing costs?
So Bank of America's grant, the biggest difference is there's two. So one, we don't want our money back at all. It's truly a grant. So we are giving you this money to help you gain home ownership, right? The second part of that is we do not adjust our interest rates to give you money. So T-Shack, for example, and this is only because I work with that one a lot, mirrors their interest rates based on how much assistance you're needing. The less you need, the better the rate. The more you need, the higher the rate. That's how they offset their cost. City of Dallas has a requirement to where you have to be in the home for a certain amount of years or they're going to want their money back, right? So always just kind of be aware of what each one is requiring from you. If it makes sense for you to take the money and be in a home for 5 to 6 years, then do it. It makes sense. But just always be aware of what each one is asking of you to make sure you're not in a situation later on where you're going to have to give this money back and you don't have the means to do so. So that's the biggest thing. Bank of America does partner. As you know, we partner with Habitat. We partner with the City of Dallas. I've taken the City of Dallas, City of Irving, City of Fort Worth. I've taken multiple classes to be certified to utilize those programs, as well as offer Bank of America's grants.
Awesome.
And layering is an option. I mean, you can always stack them up.
Yeah, and that's why it's important to have a seasoned, experienced lender like yourself. So Melissa, we appreciate you. If you don't mind telling us, thank you for the information and saying thank you on the chat. Melissa, everyone is enjoying the information you've given us today. With that, I think we're going to be done. I just want to thank everyone for joining us this afternoon. I know we could have, you could have spent it some other time or catching up on some other stuff at home, but we do appreciate you guys here. Melissa, thank you. And with Bank of America for hosting us and presenting these great information. Again, my name is Christian Marquez. I hope to see you guys for our next webinar next month. And so if you guys haven't signed up, definitely sign up. It's in our calendar and our website online. And with further ado, you guys enjoy the rest of your evening and have a nice and cool afternoon, okay?
Thank you.
Bye-bye. Thank you, Melissa.
Bye.